All right, welcome back to another episode of the Black Bullion Show. Will we have $1,800 gold this week? Well, last week ended with increased market volatility after all that bad news and economic forecasting from the Fed. But what does that mean for gold? Well, find out shortly, but first, if you're new to this channel, please hit that big red subscribe button right down below. Also, please hit the like button. It helps to get this economic evangelism. I see it right on out there to the masses. See them right through that window. Okay, so some analysts that Kitco spoke to recently seem to think or seem to be a bit hesitant about gold breaking through $1,800 this week. One analyst points to low inflation pressures. And, if you take a look at the 10-year and 2-year yield curve, we had a dramatic decrease from its previous steepening. Take a look here. About that Friday, June 5th, when we had all of that euphoric economic or exuberance in the equities, we had this huge steepening. And, usually this tells us that investors are expecting recovery with added inflation. But now we're starting to see opposite behavior and a dramatic decrease here. There's a little bit of a bounce here that happened on Friday, though. But what that tells me is that people aren't really too sure about a recovery happening. And with that, added inflation in the future. So I can understand where, some of those analysts, hesitation comes from. Another analyst says the following, and just going to read a quick quote here. I am neutral on gold and looking for a sideways trend between $1,655 and $1,765. Cisniski told Kitco News on Friday. For the next few weeks, we are probably going to see a lot of neutrality across a lot of markets as we are heading into midpoint of the year. There is a ton of positive and negative news, and people are waiting to see how things shake out. Central banks unleash all this stimulus, and there is not going to be anything new coming for a while. Markets are stabilizing. Millman is slightly more bullish in the short term, widening his next week's range to include $1,800 an ounce. And I quote, given the volatility, my range has extended. On the upside, I'm looking at $1,800, and the downside, $1,650, he said. The next big resistance level for gold is 1760, said LaSalle Futures Group senior market strategist Charlie Netos. If we challenge that next week, we will be looking at 1780 as the next resistance, Netos added. So let's take a look at where some retail investors are currently piling in. Now, we're going to be taking a look at GLD here, and I'm using the following to analyze it. So we're looking at the simple moving average. We're looking at volume, relative strength index, and Bollinger Bands. And we're looking at a range from June 14th to the current day. Now, generally, I kind of see, kind of like what some of these analysts are saying, gold kind of going either way. Why? Well, if you take a look at, let's say, for example, the Bollinger Bands, we're kind of right in the center here. If you take a look at, though we've had some, relative increase here over a span of time from March, a relative increase in price here. We've been seeing, either a drop off in volume or just general, not much happening, within volume, and it's slightly kind of dropping a little bit. And if you take a look at the RSI, we're roughly in the middle. So we're not necessarily looking at anything that's too behavior where it shows that, things are looking pretty underpriced or pretty overpriced. Right now, we're somewhere in the center, and it's kind of hard to really make a call looking specifically at GLD right now. But that's where a lot of investors tend to place their bets. You can also look at the GDX as well, GDXJ as well. But just for the purposes of this video, I just took a look at GLD. Now, Kitco also mentions in their article the second wave that could possibly happen. Now, I don't think that you can call what we are seeing right now a second wave. I think it's essentially the same wave, and we're just still dealing with it. A second wave, honestly, I think will come once it kind of dies out, and we might possibly get a new strain, kind of similar to how the flu operates. You get new strains every year. I'm curious to see if anything like that will happen in the fall. And also, here's some data to keep an eye on, also from Kitco. So I'm going to read this here under key data. The markets will be eyeing the Fed Chair Jerome Powell semi-annual testimony to Congress on Tuesday and Wednesday, which I'm actually excited to watch. I know I'm a little bit of a nerd, but I love watching, Jerome Powell talking to Congress. I kind of like the back and forth. I kind of like when I see like the politicians kind of use that as an opportunity to get their talking points out by not really talking to Jerome Powell. They're kind of talking to their constituents. It's kind of a weird thing, but I digress. I'm continuing, in which he is likely to reiterate the Fed's dovish message from this week. Other critical pieces of macro data will be May's retail sales and May's industrial production in the U.S., which are both scheduled to be released on Tuesday. The U.S. focus will be on how high retail sales and industrial production bounce following the ending of lockdowns across many states. Given car sales numbers have rebounded strongly, we expect robust retail sales, said ING economists on Friday. Factory restarts should also mean robust manufacturing activity, but oil and gas extraction will be a drag on industrial production overall. Other data sets next week include Monday's NY Empire State Manufacturing Index from June, Tuesday's Bank of Japan interest rate decision, Wednesday's U.S. building permits and housing starts, and Thursday's Bank of England interest rate decision, the U.S. jobless claims, as well as the Philadelphia Fed Manufacturing Index from June. So we have a huge array of data to get through, and I can't wait to share it all with you guys and give you my take. But let me know what you guys think about the upcoming week. Are we going to see some hesitancy in the markets until we get this new data coming in? Or do things look pretty, free and clear for gold to hit 1800? Let me know in the comment section below. Thanks again. Please hit the like button. Also, please subscribe. It's Black Bullion.